Good afternoon, everybody. Thanks again for joining us, and congratulations, because this is one of the first steps on your track to home ownership. So I want to give it up for you guys first and foremost. Congratulations on taking the first step and getting educated on the process. If you haven't already, take the time to scan the QR code and fill out the form to basically answer certain questions on what kind of home you're looking for and what you're looking to accomplish. Okay? All right, so for today's agenda, we're going to go over who we are, what we do. We have four speakers here to educate you on the process, on the things you can do to prepare for the process, and the things that are in your best interest to take care of after you close. So you work with the process, you work on the process with us, and you not only get professionals to help you in the process, but you also get lifelong friends. I have served over 60 something families, and every one of them are still in constant communication with me. So you get lifelong relationships with full blown support all throughout the process and beyond. We're also going to go over a little tax talk and mortgage protection and life insurance. Then we're going to share some success stories with you throughout and at the end of the presentation. And then we're going to have a little Q&A session. And then we're going to have lunch and go over some goodies. All right, so I am Robert Kenneth Morillo with Aroa, Florida. I have been in the business since 2017. I've been in Florida since 1997, and I pretty much consider myself a Floridian. I don't know about y'all. So I'm a licensed real estate broker now. I became a broker in 2021, and my clients remember me for my extensive market knowledge as well as my commitment to help them find their dream home. All right, so as I said, I was licensed in 2017. I left from managing a valet company and driving trucks overnight. I pretty much quit my jobs cold turkey and had about 2 to 3 weeks to actually get my license and start the new career. So I came in full entrepreneurial style. In 2020, I joined Compass Florida through an invitation from another luxury agent, and I was with them until August of this year. This year, I actually decided to launch my own brand, which is Aroa, Florida. In 2021 was when I became a licensed broker. And in 2023, just before leaving Compass and starting Aroa, I hired the #1 real estate agent in the country to help take my business to the next level. And for next year, we are looking to help over 24 families to purchase or sell a home in 2024. So, Rob.
And that is me. I am Robert Almonte, your licensed mortgage advisor. Sorry, I go by many titles, loan officer, mortgage broker, but I just felt that one was very prestigious and kind of fancy. So my clients associate me with delivering a thorough mortgage solution that are personalized and specific to your goals. Because we understand that everybody's situation is unique. So you want to make sure that my advice and that your mortgage fits your needs and your budget as well. I've been in the business since 2001. I originally started working in Countrywide Home Loans in my home state of New York. When I first got into the business, I didn't even know what a mortgage was. There was a lot of great shed upon me. I'm a New York City kid, grew up in apartment buildings. But as soon as I started working in the mortgage industry, I quickly developed a passion for it because I saw the impact that I had not only on individuals after they achieved the home ownership, but also on communities and how you can plant deep roots within a community by having home ownership in that community. In 2005, I decided to leave my home state of New York and move to Florida. So I've been in Florida since 2005, but unlike Rob, I still consider myself a New Yorker. New York, my city's in my heart forever, but I do love Florida as well. In 2006, I obtained my mortgage broker's license in the state of Florida. I've been in both operations and sales throughout my tenure. I spent 10 years actually in processing and underwriting. And in 2013, I became full-blown originator. So the last 10, 11 years, I've been strictly originating, and it's been very fulfilling for me. My record year was 2021, where I helped 85 families or households achieve home ownership for a volume of over 21 million. I have worked at several different institutions. As of last year, September of 2022, I joined Movement Mortgage, which is a great company because I love education. I feel like children are our future, and if they're well educated, it's even better for the future. And Movement donates half of their proceeds into opening up schools, which they call Movement Schools. So it's grade school between the grades of kindergarten through 8th grade, because they think that those years are very vital before kids get into high school, for them to have a good education and upbringing so that they can be good citizens when they grow up. And my goal for 2024 is to help 24 families and beyond. My actual numbers, I want to help 100 families achieve home ownership. And my hope and expectation is that each one of you in this room who really wants to obtain home ownership, that can allow me to guide them through that process so that you can achieve that goal. So we hope that today, we already know that you're motivated. I mean, you're here on a Saturday. It's your day off. You can be doing a whole bunch of other things, but the fact that you're here speaks volumes. We want to respect your time, and we want to fill you with even more hope, because as you hear the news now, there's a lot of negative news about buying houses. If you turn on the news, it's like the worst time to buy a house, right? But to me, buying a house is like planting a tree. When's the best time to plant a tree? Yesterday, a year ago, 10 years ago, right? Because that's when you start building equity, right? Because for the average American, the means of building wealth in the United States is either through retirement savings, right? Like Roth IRA, 401k, or through home ownership. So my passion and my goal is to lead people in that direction and help them if that's really what they want to achieve. So like I said, hopefully I can turn your dreams of home ownership into a reality in 2024.
All right, so we also have Heidi Rodriguez here with Tax Specialist of Kissimmee. She's going to be going into a more thorough introduction during her presentation. You have something you want to say?
Just welcome everyone. Thank you again for your time, and look forward to hopefully working with you here next year.
And we also have Veronica Leonard here with Pinnacle Elite Agency.
Yeah, nice to meet you all. I'm so happy to be here. I'm excited to work with each and every one of you. I have exciting things to talk about, so I'm so excited to be here and to be amongst these fantastic individuals that are full of wealth and knowledge. So you guys are going to get a treat today. So I'm so glad each of you are here, and I look forward to seeing you later on.
All right. So quick question, by show of hands, who here has been paying rent for over 2 years? Anybody? All right. Do any of you have an agreement with your landlord that when you leave, you're able to get back any of your money that you've paid in rent? Anybody? Nobody has an agreement with their landlord to get any money back?
They don't do that anymore?
I don't think so. All right.
What he brings to the table is a level of energy and positivity that makes you just believe.
He's not just my realtor, but he's my property manager as well as a dear friend.
It was very easy to get a hold of him. He was very good at communicating and always picked up the phone when I called.
My name is Gil Levy, and I'm honored being able to give Robert Morillo a positive testimonial, review, shout out, whatever you might want to call it.
Robert is a very fine individual, very solid individual.
I've been working with Robert for the past few years. I'm also his go-to photographer.
He's on top of his job, and he's very driven and focused, and he will get the job done.
He is your go-to. Robert does not take any shortcuts. This man is trustworthy. He's efficient. Work ethic like nobody else in the market.
If he doesn't get the job done, he can tell you who can get the job done.
And I highly recommend choosing Robert for your next listing.
When something is for you, one way or another, it's going to happen. Like, it may not happen in the moment or in the timing that you expect or want it to happen, but it's going to happen.
All right, so I really stand by that. Like, timing is everything, and what's for you will be for you, right? So, pretty much, we're not here to rush you through anything that is not for you. We don't like to rush the process, but once we are, let's just say, under contract on a home, then time is of the essence, right? We got to perform based on the agreement. So here are some of the homes that we helped our clients close. There's no deal too big or too small for us to work with. So it just shows a variety. We focus on what makes you happy and comfortable, right? And what feels right for you and meets the needs of your family. All right, so let's get into it. We're gonna be giving you guys the 14 keys to purchase a home in 2024. All right, so number one, the first step in anything and everything that we do is making a decision, right? And then once your mind is made up, the best thing you can do is what you're doing here and now, is just preparing, getting the information, and learning the steps so that you can then take the steps. All right, then regardless of what other people may say, most agents just want to snatch you up and be the first one you get a hold of, right? And that's great. But first and foremost, the most important thing is to get pre-approved. And what happens is when you get pre-approved for a loan, even if you're not qualified, I still think it's the best step to at least do the application so that your mortgage professional can actually give you the game plan on what you need to do to prepare for the process, right? So that you can get approved and understand your budget before you go looking at homes.
Right, which leads us to step number 3, or key number 3, right? Look, mortgages are not one size fits all. It could be a very complex process. We're going to simplify a few today by calling it the 4 C's of credit, right? Because how does the bank determine how much you can qualify for, how much they approve you for? So first is they're going to look at your credit, right? Not only your credit score, but your credit history, right? Because they don't know you from a hole in the wall. And a mortgage is probably the biggest finance that you're going to purchase. Or the house is going to be the biggest purchase that you will finance, most likely, right? And the bank doesn't know you, so they have to see your credit worthiness. So first, they're going to look at your credit score. So your credit score consists of ranges anywhere between 350 to 850, right? And there's 5 makeups that make up your credit score, right? 15% of it is how long have you had credit, right? Your length of credit. 10% is what type of credit you have, right? Do you have installment loans, credit cards, student loan, auto loans, a mortgage? All that factors into the score. Third is another 10% is any new credit. If you've recently opened any new credit, that can affect your credit score too, right? Now, the biggest 2 factors that affects your credit score is your payment history. That's 35% of your credit score. So one late payment of 30 days can have a detrimental effect on your credit, right? And also, the other portion, the 5th one, is utilization. If your credit cards are maxed out, then that's going to affect your credit score. Those are the 5 things that make up your credit score, and that's how the bank determines it. They also look at previous events, meaning bankruptcy, foreclosure, judgments, things like that. And there is life after bankruptcy. So I don't know if anybody has ever had bankruptcy or just thinks, oh, I've had bankruptcy, I can never buy a house. Believe it or not, 2 years after bankruptcy, you're eligible to buy a house, right? So that's not the end of the world. You can get a clean slate. So after they look at your credit and determine your credit score, credit history, and it's eligible, they look at your capacity. How much can you afford, right? Now, what you budget for and what the bank tells you that they'll approve you for are 2 completely different things, right? As a threshold, the bank is going to say 50% of your gross monthly income needs to cover the minimum monthly payments on whatever debts are reporting on your credit, right? Minus any utilities, cell phone, gym memberships, or subscriptions. Just the minimum payments on your credit report, right? And then That's how they calculate your debt to income ratio. They look at 50% of your gross monthly income if you're salary, right? If you're self-employed, that's a whole different ballgame. They're going to look at your net earnings after expenses, right? So they'll say 50% of your gross monthly income or net income if you're self-employed has to include the minimum monthly payments and the monthly mortgage payment of the new house that you're purchasing. So if your budget is higher than what the bank says you can qualify for, I can tell you right now, you need to readjust your budget because you're over exceeding your income limits or your spending limits. Now, you also have to be realistic with your budget. I can't tell you how many times I've reviewed applications and I'll just tell clients nicely, like, well, based on your credit and income, you can qualify for a monthly mortgage payment of $800. They look at me and they say, perfect, excellent, that's exactly what I want. I was like, that includes taxes and insurance, even better. Like, you're not gonna find a house with a $800 payment. So you have to have a realistic budget, right? I think the average home right now is selling for, what is it, about $350 purchase price?
The median in Orlando has gone up a little bit.
$350,
It's
right?
close.
That's a monthly mortgage payment,
Yeah.
roughly around $2,500 with today's interest rates, right? So that's your capacity. That's how the bank determines. That's the threshold that they use to determine how much you can qualify for, how much they would approve you for. Some programs would allow you to go above that 50% threshold, such as FHA or VA, but we can get into those based on your current situation and what program is the best fit for you. So the third C is your cash, right? You need down payment to buy a house. Not only down payment, you need closing costs. Just your down payment alone is anywhere between 3 to 5% of the purchase price. That can be a lot of money, right, for some people. But the bank is going to ask for 2 months of your bank statements, and they're going to look not only at your available balance, but also your transactions, mainly deposits, right? So if there's any deposits that are non-payroll, meaning cash or from another source, the bank is going to want to know where that money came from, right? That's how they try to avoid straw buyers and make sure that they know the origin of the funds you're using, making sure you're not buying for somebody else that's giving you the money and using you just for your credit and income, right? So it's very important that you have, if you do have cash, it has to be in your bank for at least 1 month. You have to what they call season the funds. If not, you will not be able to use it. Now, don't get discouraged if you feel like, man, I don't have 3% or 5%. I'll never buy a house, right? There is down payment assistance programs available, which help cover the down payment, and you may have some money left over from the assistance to help cover some of the closing costs. So I've seen people get into houses with less money than it takes to rent a house. So I don't know, to rent a house, I think you have to get like 2 months security, a deposit, and it gets crazy.
Yeah, now you have to earn 3 times the rent.
Earn 3 times the rent, which is, to me, in some cases, unrealistic based on the rents. But, right? But you have to make sure that your funds and your assets are in line. And another thing is, aside from down payment assistance, if you're fortunate enough, like some people are, and you have a relative, a family member that wants to gift you a certain amount of money to go towards your down payment or closing costs, the bank does allow that as well. So keep that in mind. If you do have somebody that wants to give you a gift, the bank will accept that. The only thing that's frowned upon, that is a no-go, is cash. Cash deposits are frowned upon by mortgage banks, so you will not be able to get away with that. And then the fourth C is the collateral, the house that you're purchasing. Are you buying a single-family residence, buying a multi-family residence, right? Is it a condominium? Is it a townhome, manufactured home? All that matters when it comes to the interest rate that you're gonna pay and the down payment amount. So collateral is very important because that's what the bank holds as collateral. They gotta make sure that they have a safe investment in order for them to approve you. So not only do you have to get approved as a buyer, but the home that you're purchasing has to qualify for financing as well. So it's very important that the collateral that you decide to buy is able to get financed. And the next slide, we'll move to the documentation required once you pass through this initial screening, right? Because once you fill out your application based on your employment status, whether you're self-employed or salaried, right? They're going to ask for 2 years of W-2s if you're salaried, 2 years of tax returns if you're self-employed, and we need 2 months of bank statements, generally. There's some programs that allow for 1 month, but generally have in mind is 2 months of bank statements. You also need, if you're salaried, 1 month of pay stubs, right? So those are typically the documents that are required from you. Once you're on the contract and the property needs additional documentation, then that's something that we'll work on at that time. But initially, just to get through the initial pre-approval process, those are the documents that are required. And then once you hand me those documents, I review them, I feel like everything will be okay. Then you move on to the next step, which is talking to your realtor and searching for a home. So you look at Zillow, and I love seeing like the Zestimates of the monthly payment. No, that's don't go by that. So that's why even more so it's important to speak with a mortgage professional so that they can go over your budget and let you know what the exact monthly payment would be for the purchase price that you're searching for. So next slide.
Yeah, you don't know how many homes in the first year that I've shown just from getting excited meeting a Zillow client, and they are not even close to qualifying for the home that they found. So or that they wanted to see, right? So step number 5 is finding the right real estate agent, right? You definitely want to find someone who has a proven positive record and basically just the know-how and how to navigate. And even if you're not buying in Orlando, I say it's very important for you to work with a hyper local agent. What does that mean? That pretty much means someone who is in their business full time every day in the market that they serve, right? So if you were to want to buy in Tallahassee, Jacksonville, Tampa, or Miami, yeah, I can sell anywhere in Florida, but that doesn't mean I know everywhere in Florida. I'm gonna much rather refer you to an expert that I know that is also full-time in those areas and have you connect with them in order for them to serve you best, right? So if you haven't done recruited an agent at this point, then obviously when you have your pre-approval and your lender says, hey, you're good to go for this amount, this would be your monthly payment more or less, then this is the right time to connect with an agent and get educated, right? So the ideal real estate agent should have up-to-date market knowledge and top-notch negotiation skills, right? You want to make sure you're working with someone who has not only the ability to just open the door, let you in, you fall in love, right? It's all it's all about their ability to go to bat for you to get the best deal, best terms possible, and make sure you're making a sound investment, right? One way to indicate whether or not someone is working on your behalf, if they're not able to provide you with some numbers on the value of a home before you submit an offer, then that's, to me, a red flag. You want to work with someone who's going to give you a valuation of the property before you submit an offer with any dollar value on it, right? Because you want to understand if you're overpaying for a property, underpaying for a property, or coming in right at fair market value, right? And of course, you want to make sure that, again, they have the ability to negotiate beforehand and know how and when to negotiate during the process. Because just because you go under contract with certain terms and conditions at a specific price doesn't mean those terms and conditions can't change after, right? After you review the inspection, so on and so forth. So we'll get into that a little bit deeper. Rob's going to go into the pre-approval and what happens as it's issued.
Right, so then step number 6 is the pre-approval issued, because prior to that, when I collect the documents, go over your application, that's pretty much a pre-qual that we call it. As you're meeting with your realtor, searching for homes, I'm handing off those documents and your application to my team of underwriters and processing, and they're overlooking everything and making sure that you do qualify, right? And then once we get their approval or they're okay, then from there, you're as good as gold, right? And I can't tell you how many times, I would say 8 out of 10 times that I issue a pre-approval and an offer gets accepted, that listing agent is calling me. Hey, I have a pre-approval letter here with your name for so-and-so. How solid is this pre-approval? Did you check their credit, their income? And these realtors are savvy. Did you get 2 years of W-2s and tax return? Are they self-employed? They'll ask pressing questions. And I have to vouch for it because my name is on the line. I can't just say, yes, I did, and then something happens along the process where that comes back to bite me. Guess what? that listing agent is not gonna accept another offer from you. You can go and buy another house and deal with another agent, but that's my name on the line. And it's a small community, right? And you don't wanna build that rep of being a bad loan officer where you're handing out pre-approvals to pretty much anybody just to say they're approved. So it's important that you do get pre-approved because that boosts the confidence and approval, and it gives the listing agent that reassurance that, yes, I did my due diligence, I reviewed everything, and they're pretty much good to go. And then if you tell them that, 9 out of 10 times my offer gets accepted, right? So that is why it is so imperative to give all your documents up front and not say, oh, I'll give it to you later, because if you do that and something happens afterward, not only have you lost time, but by that time you can have done an inspection, maybe even an appraisal. That's about $1,000 out of your pocket that you cannot get back. So it's very important that we do our due diligence up front to save you not only your time, but more importantly, your money, right? So with that said, we'll move on to the next key, number 7.
All right, so then this is where the real fun begins, right? This is where we have the ability to go house hunting, right? I love going in and out of homes all day and every day, but you know, there's an effective way to do it. So once you have your budget from your lender, you have your approval, meaning as soon as you see something that you like, you can actually submit your offer, right? And increase the likelihood of getting that offer accepted. We go house hunting based on your needs, preference, and other house criteria, right? It helps to figure out what type of home you want to narrow your search down, right? So once we find the fitting house, we would make an offer that makes sense, right? That goes back to us running the numbers, making sure we're at a comfortable number. Why? Because 9 times out of 10, when you're financing a home, you're gonna have to go through the appraisal process, right? We'll determine a fair price to make the offer, and then we'll talk about including possible contingency stipulations and or requests for concessions. So a contingency is like, all right, hey, we want to present this offer and we can close based on these terms, contingent upon something else happening, right? Contingent upon an appraisal, for instance. And we'll go a little bit deeper about how that works with the appraisal, because that may be something that affects the deal later on down the line, right? So yeah, we go house hunting, we go all throughout town, we search for homes that fit your budget and your criteria, and then you know, we go into the next steps.
You go back to the mortgage lender after you find your house, and depending on how soon or quickly you find the house from the time you solidified your pre-approval, will determine if any of your documents have been expired and need to be updated. Typically, it's just bank statements and pay stubs if you're salaried, right? Tax returns and W-2s don't expire in like 1 year. Yeah,
so once we do all the house hunting and you say yes to the address, we basically prepare the offer and we submit the offer to get accepted by the seller. This may happen 10 times throughout the process. If we get offers rejected or counter-offered and we don't have what's called a meeting of the minds, sometimes you might get your offer accepted on the first go around. Everybody's situation is different, right? So there are several things that have to happen simultaneously once you go under contract, right? 3 main things is your earnest money deposit has to be submitted within a certain amount of time. Your home inspection has to get scheduled, right? Even if you said, you know what, I don't care, I want this home no matter what condition it is in, and we put in a 0-day inspection period, I always encourage my home buyers to do an inspection on the property, just so that you know what's going on with the property, both inside and out. Even if we're doing new home construction, I highly encourage, because new home builders, they get away with murder sometimes. You know, they either want to do certain things after closing, or they want to, you know, just, hey, we inspected it for you, so it's good to go, it's brand new. And as I don't know what your experience has been with buying a used car. I'm Google Gaga eyes when I look at a used car. It looks perfect. It runs. It can do everything that I need it to do. But 9 times out of 10, or I can say 10 times out of 10, every time I bought a used car, I always found something wrong with it after I paid for it, and after I got it in my possession. So I wouldn't want that to happen to my buyers either, right? And then the third thing that happens is the lender is going to issue what's called the initial loan disclosures. That's basically disclosing what the loan looks like, what your loan amount is, right? The loan amount is always going to be different from the purchase price if you're putting a down payment down, right? And what you can expect your payments to be, your principal, interest, taxes, and insurance. And then essentially, once you review that initial loan disclosure, then you'll be signing it for acknowledgement and then moving on.
It's very important that during the processing and underwriting process, or just through the pre-approval process, right, there are what I call do's and don'ts. You're not gonna go run your credit with anybody else. You're not gonna switch jobs. You're not gonna go buy a car. There's like the 10 commandments of what not to do, and I do share those with my clients once I pre-approve them so that they don't mess up their pre-approval. Because you trust me, I've learned from mistakes. Clients will get pre-approved, like, oh, I'm good, I'm solid. They'll go apply for a car, and no, you're no longer pre-approved, right? So that will kill your pre-approval.
I've seen a gentleman lose his deal just from buying an Xbox on Black Friday. That's less than $500.
Yeah.
So he surpassed his threshold. Just wanting to buy an Xbox ruined his opportunity at his house. He was 21 years old, really young. So he has plenty of time to buy a house at any given time. But at that point in time, he was so mad that small purchase on a credit card ruined his contract.
Yeah, and I'll say, look.
So that you got to take that very seriously.
Absolutely. And look, and when I was a young LO, I would tell you I didn't advise my clients to do that. Some of them did do that, and I felt very bad. I felt responsible for that because you didn't know any better. I can't blame you. That was on me. So when we're in the processing and underwriting part of the process, you're pretty much already good to go if nothing has changed. What's gonna have to be going under review and scrutiny is the property that you purchased, because it has to be financeable. And mainly the bank is gonna look at 4 points in the property, right? Which is what you do called a 4-point inspection. You're gonna wanna make sure that the roof has sufficient age, that the electricity is running correctly, plumbing is running correctly, and your AC. If you pass those, you're pretty much okay, unless there's internal damage like water damage, wood rot, or things like that would have to get corrected. But once you're in processing, that's when we'll order the specific title documents to the property you're purchasing. Make sure that there's no outstanding liens that won't get satisfied prior to closing or things like that. And then at that point, we'll also order the appraisal. And once you do the inspection, if everything goes well, you can start shopping for home insurance as well. Now the appraisal process. Once the lender receives the appraisal, it'll get reviewed, make sure that the appraiser did his due diligence, and we'll confirm the value, right? Because that's the bank's biggest concern. Does this property appraise for the amount that the seller is selling it for? Now, what happens if the property comes in for less than what it appraised for? Then we have 3 options. Either A, the seller reduces the purchase price. B, we give the seller the option to rebuttal the appraiser's opinion of value by providing additional information that the appraiser didn't include in the original report. Or third, the road less traveled is if you really want the house, seller doesn't come down, rebuttal doesn't work, you can cover the difference or just walk away from the contract at that point, because there's a contingency in place that will allow you to walk away if the house appraises for less than the purchase price. So it's very important that the appraiser or the appraisal comes back at the sales price or higher. Now, if it comes back higher, great, you just bought a home with equity. We do not share the appraisal report with the sellers. That's strictly confidential to you. But if the price does come in less, then we have to share with the seller so that they can see the proof and be willing to lower the sales price.
All right, so from initial loan disclosures, you're gonna get a document, right? Once we get beyond the appraisal phase, you're gonna get a document that is what's referred to as the CD, right? The CD is what's called the closing disclosure. This disclosure is going to look very much the same as the initial loan disclosure. The closing disclosure is the final numbers as far as what your exact payments are going to be, the exact terms of the loan, and pretty much Robert has how many days before closing, or
3 business days.
3 business days, you have to have this closing disclosure presented to you for your approval and confirmation of all the numbers, right? It's also going to disclose your interest rate,
Correct.
so on and so forth. So that's step number 11. And then once your closing disclosure is acknowledged and we move forward, Rob is going to be coordinating with the title company for closing.
Yeah, so once the CD is issued, gets reviewed, I always review the closing disclosure with my clients, make sure that they're okay with the fees. I don't want any surprises at closing, because the last thing you want to do is get to the closing table, sign documents that, wait a minute, what is this fee? I don't know what this is, because it can be disastrous. So I make sure that I review that with my clients prior to, so that if there are any changes that are needed, we have sufficient time to do so. So once the CD is issued, you're okay with it, it's signed, and all of the loan conditions have been satisfied, we get a clear to close. Then the loan package or closing package gets submitted to the title company. And at that point, we balance closing figures, meaning the lender's closing department reviews all of the fees with the title company. They both coincide. Yes, everything looks accurate. They agree. And then the closing package is approved and issued, right? We'll review the settlement statement again. There shouldn't be any changes from your initial closing disclosure. Then once we determine the amount needed, you'll have to wire the money to the title company. I don't think title companies, correct me if I'm right, Rob, I don't think title companies accept checks for any amount. So it has to be wired, right?
Yeah.
Prior to closing. And then we always contact the title company to schedule the date and time. Because I'm sure as you would have to take time off from your busy schedule or your work schedule, the title company would also have to facilitate your closing, because they also have other closing that they need to take care of that day. So this right here is one of the best moments, right? You're already almost at the finish line. We're almost getting there. Closing is scheduled. Then we move to the next slide.
Means everything has been approved with the lender. And the last thing we're going to do before we sign any final paperwork with the title company is we're going to do what's called a final walkthrough, right? So we're going to go to the home. We're going to make sure everything is in the same condition that it was when you first saw the property, when you first fell in love with it. 9 times out of 10, if the home was owner occupied, by this time they should have moved out. Everything should be cleared. Everything should be cleaned out. And then we're just going to make sure that all of the appliances function as they're supposed to, as they did during the inspection. Make sure that, basically it's everything that you expected it to be before going to closing, right? And then once we do that final walkthrough, if there's nothing else that is requested of the sellers, like let's just say some clients, for instance, have requested for the home to be cleaned thoroughly before, we sign at closing, right? But if there's nothing that is requested at that final walkthrough, then we go ahead and sign at the designated time, date, and location. So for your closing, we're either going to sign at the title company's office, the title company who's helping with the processing. We're either going to sign at their office. We can sign at your home, at the convenience of your home. We can sign at the convenience of the new home, the home that you're planning on moving into, right? Or we can do what's called a mobile closing, where, it's either going to your home or going to work, right? Going to a remote location. That would be for your convenience, right? If you guys have a lot of moving around and you just don't have time to take out of your day on the day of closing to go to the title company's office, then we can set up a mobile notary to meet you with all of the documents. I pride myself on being there physically for our closings, just to make sure you're gonna sign a big booklet. It's gonna be 9 times out of 10 is gonna be over 100 pages, right? And you're gonna be overloaded with information. It's gonna, let's just be real. It's gonna feel like you're signing your life away, right? So I pride myself on being there so that if you have any questions during that process, we can answer them. And the notary also has experience in explaining the documents as best as possible so that you know what you're signing as well. And then, go ahead, Rob.
And then the happiest moment of the process, take possession. The deal is funded, you get your keys, and you are officially a homeowner. And I can't tell you guys how many times I've been at the closing table and people just burst out either in tears or they're hugging, they have champagne. I mean, this is a day to remember. And your closing day should be marked on your calendar and should be celebrated every year as your home anniversary. I've bought 2 homes in my lifetime. I wish I would have bought more, but I've purchased a home twice, and I can tell you both of my closing days. October 30th, May 6th. The second one is special to me because that was my oldest daughter's birthday. So every year, we celebrate my daughter's birthday and our home anniversary. I mean, it is a great feeling to know that you're taking possession of your own home. Because I heard somebody say one time, and I'll leave you with this, where we lay our heads, where we teach our children, where we experience the ups and downs of life, where we rejuvenate, where we let our guard down, guys, that's sacred ground. Our home is sacred ground. So to have something to call your own, you don't have to call a landlord to say, hey, I want to paint this wall blue or green or whatever. If you want to remodel, that's your home. You can put it to your taste. I mean, home ownership to me is one of the best things people can do to set themselves up for retirement and even leave an inheritance for their children and to build generational wealth. So the fact that you're here on a Saturday to learn how you can own your home, whether it's in 2024, 2025, whenever it is, that means a lot to us. It means a lot to me. This is what drives my passion, to help people achieve home ownership. And I've experienced that. And I can tell you, I've been in the business over 20 years. I didn't buy my first home till I was 35. So I was renting and telling people how great it is to buy a home. And when I bought my first home, I can't even tell you, I was overwhelmed with joy. So trust me, guys, I share in that joy with you. And I know for a fact that if you are here and you are determined to own a home with our guidance and your effort, we will achieve that dream. So thank you for being here and hope to see you as future homeowners.
Yeah, so, and just to reiterate one more time, the closing of your home and taking possession of it, that's 2 separate events.
One thing I would say, once you take possession at the closing, you're gonna get copies of all of your closing documents, whether you get them in a file folder or electronically. I would say keep those documents in a safe place for as long as you own the home. Because you never know when you might need, whether it's your survey, your deed, whatever it is. Keep those documents in a safe place for the entirety of your ownership of that property. So,
Alrighty, next slide. All right, so here are some of our clients at closing. So, the social proof of me being present, we're there from A to Z and beyond. And our commitment is to serve, not just sell. So you'll be surprised how we communicate even years after the initial transaction.
He knew what I wanted so much that whenever he came into here, he literally sent me a text and it was like, the ambiance here is like amazing. And I came in and I was like, yup, it is. My name is Leslie Chavez, and this is the story of how I met my real estate agent, Robert Morillo. Okay, so it all started when I was tired of renting and I decided to become a first-time homeowner. So I was talking to my friend about it and she was like, I know a guy. I am a teacher, that is my career. So it is kind of like a tight schedule sometimes where I'm teaching all day. So Robert was able to work around that, even if it was like late at night, and I had to like a quick question, he would, just answer. And there was one time where I had to go and send the check for the HOA questionnaire, and he went out of his way to pick it up from my house and go and take it, drive it like an hour away because I couldn't do it and they needed it before like 3 o'clock or something and I did not have time. So he stepped in and, you know, did that for me, which was really awesome. So the process for looking for homes with Robert was pretty smooth because I gave him all the criteria that I wanted for my new home, and we looked at different properties, and then we finally found the one that I loved. From there, we made an offer. Sadly, there was someone who was also making a better offer, and so they took it. But then, for some reason or another, that person backed out, and the selling agent got in contact with Robert right away and was like, "Hey, are you guys still interested?" Because, you know, he hadn't built that relationship with the selling agent. So I think that was very helpful when it came to the process of me being able to get my new home. Okay, so the day of closing, he was able to arrange for someone to come to my school and finalize everything. He gave me the key. He was there throughout the whole process. And even after, you know, we closed, he still stayed in contact and made sure, you know, that everything was good. He even brought me a basket to welcome me home to my new home. So it was really awesome. Thank you, Robert, and there's definitely no one I would recommend.
Hello, so again, my name is Heidi. I am your tax specialist and realtor. I'm with Tax Specialists of Kissimmee. Of course, our office is in Kissimmee, but we do service nationwide, all states. My top priority as a tax professional is to optimize your tax profile. So that's consists of diving in deep to perhaps what you are accustomed to or who's been handling your taxes previously, and see how we can restructure or better assist. Restructuring and reducing your tax liability is our #1 goal, and we pride ourselves in that. So we've had the opportunity to serve many clients over the years that have been very loyal to us, so we're grateful for that. And of course, maximizing your return if you're entitled to receive one. So my timeline, I became a licensed realtor back in 2012. I was actually, my family was affected by the crisis in 2008. So kind of going back to what Robert was saying, we were so happy to get a home. You know, we came from little to no means growing up. So it was definitely a great opportunity that we thought, but unfortunately it didn't work out. So we went through foreclosure, and that kind of is what inspired me to become a real estate agent. You know, I seen my mom go through a difficult situation, and I didn't know how to help her, and no one really seemed to be able to help. So that motivated me to become an agent. In 2014, I was introduced to the tax industry. I was fortunate to have a mentor who was willing to guide me at the time in the business world, using what I consider unconventional ways, but they were very effective. So it allowed me to thrive and to grow my business. In 2016, I launched Tax Specialists of Kissimmee. I was overcoming a heartbreak and an IRS audit at the time, which inspired me to continue to push forward since I had to pay the IRS back. So that was the inspiration to building my own brand. In 2020, I joined eXp Realty, and I registered a branch office in Kissimmee, which is, it's all one location. So we have the tax office on one side, and then we have the branch office on the other side. So I had the opportunity to join a very productive team of agents, which allowed me to recruit agents under me. And you know, we're here now. Lastly, for 2024, my endeavor is also to help 24 families, not only with their taxes to qualify for a home, but of course to purchase their home. So 5 tips that we're going to talk about. So our comprehensive service aims to amplify or to simplify your life. So we have recently, due to COVID, introduced an interactive virtual tax portal. And if you have the opportunity to become one of our clients, you'll actually see how user-friendly it is and allows you to be able to do everything you need to do from the comfort of your home. And it also will update you on your, the process of your returns, if we're needing anything, and how your file is being prepared and when we're ready to review. And allows you to also ask any questions through the messaging portal. So I know sometimes people complain because they cannot reach their accountant, whether it's in season or out of season. This will allow you to ask any necessary questions, or if you receive a letter throughout the year that you have questions about, you can upload them, keep them there, store them there for future reference, and then at the same time, we can address any questions in a timely manner. You'll also have, of course, access to the preferred lender, as Robert is so helpful. And then, of course, the realtor consultation. So I work directly with Robert during the season, of course, since I am managing my office and my team. I look to Robert for a lot of support, and I'm very fortunate to have him. So you guys are working with a great agent. And then, of course, the business financial support. So Veronica will also kind of go in a little bit deeper with how she can support us as well. But we do definitely assist with not only individual tax returns, business tax returns, and then evaluate how your business is structured and see how we can help to improve or make any necessary changes, and allowing you to focus on what matters more. Yes. Oh, and I'm sorry, yeah, we're going to cover those. So those are the 4 points that we're going to cover: down payment assistance, W-2s versus an LLC, tax benefits as a homeowner, and then your property taxes and estate planning. So down payment assistance, some down payment assistance programs operate on the principle of recapture. So the repayment is typically triggered by the sale of the home within a specific time frame. So you want to review those terms of the assistance program that you participated in or plan to participate to understand any potential obligations or consequences associated with a quick sale. So things to consider with down payment assistance. Tax laws and regulations can vary by locality and state. So for those that are buying in the state of Florida, we don't have state taxes, so it's more just a federal regulation, if applicable. For the most part, the tax repayment requirement has expired for homes purchased after 2008. And we do have the resources. So if you have any friends or family, or if you guys own any other properties that you may have participated in down payment assistance, well, we do have the resources to see if your specific scenario has any tax implications. So feel free to let me know at the end. Even if there are no proceeds from the sale of your home, you may still need to report the sale of the home on your tax return. So again, if that sparks any questions at the end, you guys can ask me and we can talk a little bit more about that. Typically, a capital gains tax applies for the profit made from the sale of your home. So this example I have here is for a primary residence. So if you do sell a home, or maybe you inherited a home through the death of a loved one, or through a trust, whatever the case may be, case by case, if it exceeds the proceeds, exceed $250 as a single filer, you are subject to capital gains tax, and $500,000 if you're a married couple. And again, this is something that case by case, if you guys want to dive in a little bit deeper, feel free to reach out. This is a 5405. This is the repayment of a first-time home buyer credit. So if you did receive some kind of notice from the Department of Housing, or from your title company, or have any relatives that may have mentioned this to you, this would be the necessary form that the accountant would have to complete. And I can answer any questions as well, if necessary. So as far as qualifying for your mortgage, so on average, typically you're going to have your W-2 employee. So with W-2s, it's pretty straightforward. Whatever is on your W-2 is what we report on your taxes. Those cannot be manipulated or changed. Taxable income may be reduced for taxpayers who qualify for an itemized deduction. So in the last couple years, there are less people who do take itemized deductions. So if you are curious to see if you can itemize your tax return as a W-2 employee, again, feel free to reach out. And then mortgage interest deductions may apply as well. So that is usually provided, that mortgage interest statement document is provided by your mortgage company. So if you don't receive it in the mail, usually you can log into your portal and download it, or just call your lender. And then we have business slash LLC. Now this is a very vast area, so we're not going to go into too much detail, but generally, legally, what we try to do is utilize any and all forms, schedules, and deductions in order to lower your tax liability, while maintaining the integrity of your income in order for you to qualify on a loan. So when you work with our team, we're not just preparing your taxes, and I see this often with other individuals that I've helped. You know, I may have not had the opportunity to help them with their taxes on the onset, but I do help them with their home purchase. You know, after reviewing their tax return, I can identify that there were a lot of opportunities that were missed by the previous preparer or tax person, or when they do it themselves, that could have allowed them to qualify maybe sooner and still pay less taxes if they were subject to do so. Some deductions include monthly payments for your vehicle. So it's very, very important that, especially for most of you that are in the room that are looking to buy, if you are self-employed or you complete a Schedule C tax return, we definitely want to get together as soon as possible, or at least, you know, discuss your situation, just try to see how well we can prepare yourself so that by the time you get to pre-qualification, already situated yourself, so that way, you know, we can make sure that you're going to qualify. Other deductions are gas, miles, and depreciation that can be recalculated into your tax return. And this is for a Schedule C return on a 1040 specifically. So again, there are multiple scenarios, especially if you are a corporation and you file other tax returns. You know, but this is your typical situation. So this is information that I confirmed with Robert. The lender will allow you, this is for gas specifically, so they will reapply 25 cents per mile that you write off on your tax return. So we got some basic math. Let's say you wrote off 20,000 miles. So they can reapply essentially $2,500 back into your total income. If you've established an entity such as an LLC and operate your business from home, you may also be able to take advantage of deductions like home office deduction, property taxes, utilities, and some home improvements. So if any of this is kind of like sparking a little light bulb, again, a lot of these things, we want to try to incorporate them as early on as possible prior to you purchasing a home. That way you can really, again, lower your tax liabilities, qualify, versus trying to go back and amend things or just have to pay the tax bill like many, individuals have had to. They kind of just have to bite the bullet. So, and it would be beneficial to consult a tax professional in union with your experienced loan officer. So that's what me and Robert are here for. We've had the opportunity ever since Robert connected us to, sit together. So anytime I have a client that's looking to purchase, I can reach out to Robert and we just orchestrate the return, properly. So that way the individual has a seamless pre-qualification process, and then of course can actually go through the loan without any hiccups. And unfortunately, it's not always the case when you are not working with an experienced realtor or one that has those connections. It's frustrating because then they'll send you to go, talk to your tax accountant or talk to the loan officer. So we're all in harmony, and we'll kind of do all of that mediation for you. Lastly, tax benefits as a homeowner. Now you finally go through all the hurdles to qualify: house hunting, bidding wars, inspection periods, negotiations, and you've made it to closing, right? Hooray. So what's next? Some great ways to see a benefit on your tax return and keep more of your money is some of these points we're going to cover. And so the first one is credits. So some of the credits that you can receive, and this is typically what I'm mentioning here, this is after you've already purchased your home. So now we want to kind of take advantage of being a homeowner on your tax returns. So most people, after they buy a home, and I'm going to chime in with what Robert said, you don't buy a car before you buy a home, so you want to wait till after you purchase your home. And I have so many people that will call me and they will say, Heidi, my interest rate is too high. Can I refinance my vehicle? Or can I, my car's acting up. Can I just go buy a new car? So that's important to have someone that you can reach out to and ask those kind of questions. And I tell my clients, anything, just ask me first. Consider me like your best friend. Just text me at the very least. Can I do this? Can I do that? Because you'd be surprised a lot of things that can affect you. So with a new vehicle, you want to make sure that you purchase that after you've closed on the home. And when we get together, I will make recommendations on what kind of vehicles you can purchase because they have huge advantages on your taxes, especially again, if you are a high income earner and we want to reduce some of your tax liability. So some of the recent ones, just to throw it out there, are electric vehicles. So there are credits for like Teslas. Specifically, they have to be American-made vehicles. So don't be misguided that all electric vehicles are a deduction. They are not. So, and that is something that changed in the last 2 years as well. Another thing are solar panels. So when you buy a house, especially a new one, you are going to have somebody knocking at your door to try to sell you some solar panels. And that is if we don't, give you a recommendation of someone to use. They are definitely a great investment. So I'm not saying not to do it. However, a lot of times when they sell you these panels, they'll tell you, hey, you can save $7,000, $12,000 on your taxes, which could be true. However, there are limitations and requirements that are typically income driven. So it is very, very important to consult with your tax professional that has an understanding on how that could affect you if you're even going to see any kind of credit. And then energy efficient green features such as windows, doors, insulation, to list a few. So again, I don't go into detail on which specific energy efficient, but when you do make those purchases, you want to make sure that they can provide you with whatever tax. It's not really a document, but it's it's like a tax guide that would let you know for sure if it's actually something that can be written off on your tax return. And then creative structures and deductions. This is something that I would like, if it interests you, or if we set up a consultation, this is something on a case-by-case basis that we will dive in deep to see if I can help you with any kind of creative structures and kind of adjust things. So, that case-by-case, we'll talk about that later. Property taxes. So I'm briefly just going to talk about homestead. Typically, homestead has nothing to do with your actual tax returns. It is just something that you want to make sure that you file by March of the following year after you've purchased your home, and you can do that very easily on the public adjusters or the county property appraiser website. And of course, we do try our very best to notify our clients so that you guys don't miss that opportunity, because unfortunately, if you don't do it, you're almost paying like, if not double, right, of what your property tax bill is.
A significant amount more.
Could be thousands of dollars.
Yeah.
A lot, yeah, it's a lot. So.
And we absolutely definitely remind you, so you want to be paying attention to your emails and texts, before that time comes up.
Yeah, and you will get a postcard from who is our I forgot his name. It's not Sign, right? Whoever our city. Yeah, I forgot who our city. But you do get a postcard in the mail. So just I know you're gonna get a lot of things in the mail, but just look out for anything that has property tax or homestead information on there, and put it aside because all the instructions will be there. And then lastly, estate planning and tax implications. So now that you've done all these great updates to your home, invested in all the energy efficient bells and whistles, how do you plan for the inevitable death? So in addition to some of the other things that we've learned today, another wise move that most of the wealthy class do is to deed your home into an LLC that is managed through a trust or directly into a trust. And my wonderful colleague, Veronica, is gonna, she actually assists with this, and she'll talk a little bit more about this. But it is something that when we talk about like strategic planning and estate planning, I do advise my clients to do this. And this will ensure that your heirs avoid the lengthy probate process and avoid capital gains tax. So I do encourage you guys to do just a little bit of research, not only on the probate process, so you can see how, complicated and lengthy it can be, but also capital gains, and that way, you're kind of ahead of the curve. There are many ways to invest strategically that would not only protect your legacy, but also leverage your investments while you're still living. And I think now Veronica is going to take the floor.
Yeah, so it had one realtor in particular was sending me like, although I told the realtor, I gave him descriptions of what we're looking for, the kind of area, the communities, the square footage, he was just like sending me everything that come his way, like no consideration for what we wanted, Unlike Robert, he used due diligence in terms of, understanding your needs and doing the filtering and trying to hit your target. And he did it in, boom, one shot. When we came from Trinidad, we came in on business, probably 2 or 3 weeks to go back to Trinidad. And then the pandemic happened. So we were here for a while trying to get back to Trinidad, right? And by August, we get to realize that going back to Trinidad mightn't be in our best interest. So we decided to pursue a new life in the United States. So we start searching left, right, online, and boom, I bounce up on one of Robert's ad. And when that guy called me, it was like, wow, somebody who you just connect to and who you think will understand what you're going through and make the process easier for you. And Robert was just that guy.
So we'd had so many bad experiences, and I was not in the equation or any of the conversations with Robert until the first day we all met him at this house. I was negative, pessimistic, skeptical, because I felt, here we go again. When we walked through the door, the house did not smell good. It's carpeted. I didn't quite like carpeting, but Robert somehow, with his aura again, convinced me. He used a particular phrase or an angle, I would say, and he said, you could take this house and do whatever you want with it. You can rip those carpet out, put in the flooring that you want, which is what I wanted. And I think that for me was one of the turning points.
What I want to tell you, if you want a stressless experience in getting your dream house, you only have one option, Robert Morillo.
Robert is your guy. He's trustworthy. He's going to help you through the whole process from start to finish, even helping you after you've moved in. Robert is the man.
I want to tell you that if you're looking for a house, go with Robert. He is the guy.
Thank you, Robert. We love you.
Oh, that was a really great review. I love it. I think I'm going to start doing video reviews for my clients. Well, hello again. I'm Veronica. It's so nice to be here again. And I'm a life insurance expert, but I do title myself as a financial strategist. I work with families, individuals, and businesses as well. My goal is financial education. As you know, in the United States, financial literacy is often not taught in schools. So many times we go into adulthood not having all the keys and all the knowledge to be successful financially, right? Unless we had someone who would model that for us. So my goal is just to educate, educate, educate. And then if you like what I have to offer, then we can sit down and have a conversation. But that is what I do first with all of my clients. You can go next. And before I even start on my timeline, I want to put it out there. I am a 24-year military spouse. So we have moved all over the country and been to many places. So even before I got to 2006, I have had many jobs in many careers because, you know, when we move, we sometimes can't always find what we studied and what we've done in the past. So I just had to adjust. So, but after 10 years following my husband around, we started to have children. And by 2006, I decided to take a break from working and to stay home and raise my family, raise my 2 precious kids, and also focus on improving my educational background. I wanted to go into finance, and I decided to get my degree and my master's in accounting and finance with the emphasis in fraud examination. I just have an eye for looking for what's wrong and trying to fix it and trying to figure out how to improve a business or even individuals and families' situations. Then I finally had the opportunity to become an office manager for a faith-based organization. There, I pretty much wore many hats. I did video production, I did office management, obviously, and I also managed their treasury department as well. And then after, and each one of these is a move, by the way. So, you know, we moved again, and I lived in New York, and there on West Point, New York, I was a tax preparer. I was a volunteer tax preparer for the military families there, and I did that for about 2 to 3 years. And then I segued into banking, which is one of the things that I love to do because I got to serve people, you know, hands-on every day and deal with pretty much every issue under the sun. Because I know when you come to the bank, you want to know what happened to your money, what's going on, and how can I fix it? Why is, you know, my bank account not balancing? Well, you didn't budget, right? You missed it. So that is where I found my passion to start helping people in a more personal way. And then after my banking career, I decided to go into business for myself. I was kind of tired of answering to the man. You know, I wanted to do me. I wanted to offer a little bit more than just what they were offering. I was limited, right? And I just wanted to expand. And then working with Pinnacle Elite as an independent agent gave me that opportunity. And so now I'm going to partner with Robert, and Heidi to help 24 families. But my personal goal is to help 200 families a year. Because one of the things that we see in this country is that many people are not properly insured and protected. And most of that is because they don't have the financial tools to understand why they need it so badly. Okay, so we can go to the next slide. I don't know why I'm nervous. I do this every day. All right, so managing finances and life insurance, because financial literacy matters. Well, that's what we're here for. I'm here for education. So afterwards, if you want to learn more and you want to get more information on basic financial tools and ways to improve your lifestyle, your business, reach out to me. Next slide, please. Today, we're going to focus on budgets and life insurance, right? Understanding your monthly mortgage payment, reviewing your current budget, real estate, and life insurance. Next slide, please. So how many of you have already started looking into the mortgage process? If you want to buy a home, right? You've already started looking into, you know, what price range you want. You maybe started saving some money for closing costs, right? Or even a down payment. But you realize, you know, we only make so much. So we can't have the homes that our pocketbooks can't afford, right? So we need a budget. Why do we need a budget? So the bottom line is that you need to build strong financial habits in order to be successful at even having a budget. But this is going to give you a start to moving in the right direction. Then having the budget is also going to give you an idea of how much home you can actually afford. And then thinking smart, well, after you purchase a home, there's even other surprises that come up that we don't think about, right? There's a lot of little things that we don't have to pay for before we have a house, or when we're renting, or if we're living with a family or a friend, that we're going to have to deal with afterwards. So that's what we're going to discuss today. But the first thing you have to know is, what is a mortgage payment and what is it comprised of? Next slide. So your mortgage payment is made up of basically 4 different areas. But one of the things that I like to mention is the misconception that most people think that a mortgage payment is just made up of the loan amount divided by the loan term. I mean, I can't tell you how many times when I first started looking for a home, I would just take out the calculator. Okay, so $300,000 divided by 360 months, and okay, that's my monthly payment. No, I wish it was that easy, but it's not. And we all have these mortgage calculators now that do all the math for us, right? Which is nice and it comes in handy. But understanding how it's broken down is really important, because it's going to change the way that you approach your monthly payments, okay? So looking at the principal, it's a simple concept. It's the amount that goes directly towards your loan balance, right? That's simple. Interest, on the other hand, is a percentage of the loan amount charged by the lender, which represents the cost that you are paying for borrowing that money to purchase that home. Now, in the beginning of the first few years of owning a home and having that loan, most of your mortgage payment is going to go toward that interest. But towards the end of it, it's going to go towards the principal amount. So when you make a monthly payment, let's say your monthly payment is $1,000 a month. Keep in mind that $1,000 is not going to go to the loan amount. So if you ever notice, if you ever owned a home before, that it doesn't go down that quickly, because it's spread out between all of these payments. But this is nice to know, because towards the end, it'll go towards the principal more so than the interest. But you can make changes in your budget to make sure more money is going towards that principal if it's within your budget. Then we have taxes and insurance. They fall under the escrow. What is an escrow? An escrow is an account that your lender has separate to hold your taxes and your insurance that you pay monthly. And then they pay it out yearly, annually, for you. And it's basically just, they put it in a separate account to make sure, one, it doesn't get spent. By law, they have to do that. They just can't put it wherever they want to. They have to put it into a separate account. And the purpose for that is to protect you, your home, so that in the event, let's say if it was put into a general account and the money got spent, then who's going to pay your taxes and who's going to pay your homeowner's insurance? And if those doesn't get paid, we all know what happens next, right? Someone's going to come looking for you, okay, to make sure these things are getting paid. So your property taxes, they are made up of, it's based off of your property location and the value of your home. Okay, that's how they calculate it. Then we have insurance. Homeowners insurance is generally required by all lenders. So unless you own your home outright, you most likely will have to get it. And some people may be required to pay PMI, which is private mortgage insurance. And I believe you would talk with Robert the lender, and Robert the realtor knows a little bit about it. But Robert the lender will be the one to give you more information if this is your situation, because it really depends on the home that you're buying and the value of the home So basically it says if your loan to value loan amount is over 80% of the property's value, then you may have to pay PMI. And if I'm not mistaken, Robert, that's for a period of time, right? It's not indefinite.
Correct.
Yeah. So it,
Anywhere between 3 to 8 years.
right. So one of the things to keep in mind with your mortgage budget is that taxes and insurance can change over time. Okay. So I don't know about you, but those of you who do own homes, insurance went up significantly last year for a lot of homeowners, and taxes went up a little bit. But these things can fluctuate from year to year. So you want to make sure you're keeping an eye out for these changes so that you can financially prepare. Next slide, please. So reviewing your current budget. So basically a budget is made up of your income and your expenses, right? So when you're looking at your income, the things you want to look at is you don't want to leave anything out. You want to make sure you have your primary income, any bonuses that you get. So that includes annual bonuses, holiday bonuses, and even like if you get promoted. Sometimes you get a bonus when you get promoted. So those are things you want to think about. And then, of course, any investments that you get returns on immediately, and alimony or child support. If it's used to pay for the mortgage, then you do want to include it, okay? And then we're looking at your monthly expenses. I'm not going to go into detail with all of these. We all know what we have that we usually owe on, but I do like to mention this number 6 here, this subscriptions and memberships. This is the one that gets most people because a lot of us have like Netflix and Hulu or gym membership or this or that, and they're like, you know, under 30 bucks or under 50 bucks type of memberships and subscriptions. And we forget that we have them. And I can't tell you how many clients I have come to the table and they want me to help them with their budget. And like, I don't know why I don't have enough money. And I'm like, okay, so send me all your information. And that's the one thing they always leave out. They leave out these little bills. And I tell you, these little bills add up to hundreds of dollars. And not only that, these are things that most of us are not even using. And when you're not using these things, they're not serving you financially, you want to take it out. And if you're not taking a look at your budget often, then you won't even remember that it's there, right? Because it comes out automatically from your account. And that's one of the things that I prefer, not to have all my things come out of my account automatically, because if I have to purposely go and pay it every month, I'm going to think twice about making those payments. Do I really need this and do I really want it? Okay, so it just makes you think. So once we have our income, we subtract our expenses and what's left over, right? It's going to tell you how much mortgage you can afford and your discretionary income, which is what you want to spend on any extras. And by the way, when you create a budget, I strongly recommend that you shouldn't have any dollar that's not allocated, that doesn't have a name to it. I can't tell you how many times I see people having $300-400 just laying around and they can't tell you what they spent it on. I'm like, you actually have $400 extra a month. You do know that, right? Oh, no, I don't. I don't have it. I said, yes, you do. I said, the math tells it. Numbers don't lie, do they? They don't. And you'd be surprised. So make sure you are clearly putting everything down and understanding what you have left. So now, what's the rule of thumb? Now, this is not a rule that everyone must follow, but it's just a general guideline that's going to help you at least have a fresh start or just get started, okay? And the 28-36 rule. So the 28% rule means that your mortgage payment that includes all that I had on the previous list should not be more than 28% of your gross income, not your net income, your gross income. And then the total debt, which includes credit cards, loans, student loans. Student loans are a little different because sometimes they don't always, do you all consider that when you're looking at debt?
We do. What percentage of it as a minimum monthly payment? I think it's 5%.
Yeah, but you don't put it all like in the credit ratio. Like you do?
Isn't it? It's 10% of the monthly.
The monthly payment.
Or 1% of the total amount due.
Okay.
Whichever one is greater.
So student loans are a little bit different, but everything else falls under that 36% category, and that includes your house. Most people are not operating under that 36%. But the reason for that is because they're not properly managing their budget. If you're above that percentage, that means you need 1, more income, or 2, reduce expenses, or 3, both. And that's how you will get out of it. So it's possible, you can do it. It's not difficult. If you need help, I can help you with that, okay? But this is a very important rule, and you can actually Google it. It's not anything special, you know, but this is definitely going to give you a good guideline, because if you find that you can't save a lot of money if you want to do for anything, you know, buy a car, purchase a home, or anything like that, and you can't find a way to save that money, that's generally the reason, because you're not sticking to this. Okay, next slide. So emergency fund. This is so crucial to have a safety net in the event unforeseen circumstances occur. So God forbid you lose your job, you get sick, and you don't have short-term disability, or you don't have long-term disability, or maybe you do, but they're only paying you 65% of what you were normally making, right? But when you made your budget, you're basing it on your entire income, right? So having this emergency fund is going to help you catch yourself in the event these unexpected experiences occur. General rule of thumb, 3 to 6 months is what's recommended of your total expenses. So once you purchase that house, the home plus all of those expenses, you should have that total amount of monthly expenses 3 to 6 months saved up. That's a lot of money. It sounds extremely intimidating, but it is doable. You can do it. You just need to start small. You need to relook at your budget if you're not there, or move funds around. I saw somebody they had $50,000 in their account. They weren't doing anything with it. I'm like, well, you need this much in emergency fund. What are you going to do with the rest of it? You know, they didn't have a plan for it. You need to plan for every penny. And this, absolutely, I would say non-negotiable. Okay? You need to love yourself enough and your family to make sure this is in place. Next slide, please. These are the consequences of deviating from the budget, and they all kind of fall into one another. They all feed into each other. So if you don't follow a budget, or even a rule, the 28-36 rule, you are more likely to have increased financial strain overall. Your finances are going to be stressed. Your health may eventually be stressed because of it. So that's one thing we don't want to do, okay? We don't want to end up in that situation. You also have the risk of going into default. So most people who deviate from their budget and deviate from the 28-36 rule, they are highly likely to not be able to make those payments on their monthly debt that they have. And then the consequences of that, they kind of start trickling down here. Now you're limited to how much you can save. So let's say you didn't start that emergency fund, or you just started, but because 1 and 2 are happening, now you probably can't put as much aside for that, right? Or if you want to, you know, make that next big purchase, or take that nice trip, you know, to Europe or wherever you want to go. You also have reduced financial flexibility. What does that mean? That means if you find a better interest rate, you have a car, and your car, you know, I've seen people with 24% interest rate on a car. That almost makes me fall out my seat. But it happens, especially in this economy where the interest rates are so high. You find yourself wanting to refinance, right? or maybe get a credit card with a 0% balance transfer so you can move over that debt and try to bring down the debt, right? Trying to improve your financial situation. Well, if 1, 2, 3 are happening, your financial flexibility is limited. Then your credit score is impacted by all of that. Your debt to income ratio goes up, and then it's an uphill battle from there. It doesn't mean that it's not possible to get out of it. These are just warning signs that you need to be aware of, that you need to be on your P's and Q's, and something you need to do and you need to change. And I find that when you have a partnership or a marriage, you need to work together. One person doing it by themselves is not going to work if you're in a partnership. You have to be on the same page. And I find if you can't come together to an understanding, then you find someone who can be that mediator to help, look at the situation, from a third party's perspective. Thank you. And then lastly, struggling with affordability. Being able to afford the everyday expenses. Eventually, it can get to a point where you can't, you got to nickel and dime yourself when you go into the grocery store, buying diapers, gas. Oh, I don't have enough for that. We've all been there. We've all struggled sometimes. We just want to be careful that we don't fall into these traps. Next slide, please. Then lastly, we have life insurance. 2-in-1 protection for your home and your loved ones. So I'm just going to go over briefly off of all of these just to give you an idea of what life insurance can do for you. Financial protection. So life insurance is designated to provide a death benefit to the policyholders' beneficiaries and basically give them that cushion, that financial cushion. God forbid you're no longer there for them. And one of the things I like to stress is that everyone who's contributing to the household should have life insurance, and even your children. And I'll kind of go into that in a moment about how important it is for you to do it for them as well. Income replacement. If you were to pass away today, how would you feel? Would you feel secure in knowing that your family, if you were no longer here, that they would be okay? That the income that you were bringing in, that's no longer there, that they're going to be okay, right? So you want to think about that. Life insurance can offer that. Tax benefits, there's tons of tax benefits with life insurance. You can grow your money in life insurance, building wealth, and not pay taxes on those earnings. You can also protect your entire home. God forbid you pass away, you make sure you have enough life insurance to protect your home. You're good there. You can also make sure if you set up a policy for your kids, you can predict what homes are going to cost when they're 25, 30 years old, and make sure they're covered. So the younger you are, the cheaper life insurance is, right? So that's something you want to consider. Get them started now, so when they get older, they don't even have to worry about getting it for themselves. Then we have just health benefits. So if you get sick, you can use it for that. Retirement income, legacy planning, and estate planning. Heidi touched on that. With life insurance, you can put it inside of a estate plan, but also with estate planning, you can put your home deed in an estate, and you can have a will. A will is okay to have if that's all you can get, but having a trust is where the protection comes in. And most people think that they can't afford a trust, but a trust is something that you can definitely afford. It is not very expensive, but definitely an opportunity for you to protect not just yourself, your loved ones, but all of your assets. If you own a home, if you own a boat, if you have other things, or if you hope to have that in the future, you can always add to the trust. But it's actually very affordable, and a lot of people think it's for the rich, and no. And I don't like to put political stuff out there, but a lot of people wonder why Donald Trump is so rich and why he won't produce or tell you the secrets. The secret is because he has a trust. Trust protects a lot of your money, and it has a lot of tax protection. You want to take advantage of that. And then lastly, you have access to cash. If you have cash, if you want to start years out, or if you have large amounts, you can put that into an insurance policy and use it to buy your home. And guess what? You have the opportunity of using that same money again. So if you want to learn how to double dip on your own money when buying a home, come see me and I'll give you more information about that. And that is all.
So pretty much just gonna go through, so just a quick recap, right? The things you wanna do before house, right? BH instead of BC. Monitor your credit and file taxes, right? Number 1, make the decision. 2, get pre-approved. 3, review the 4 C's with your lender. 4, get all your required documents submitted. 5, hire and actively engage your real estate agent. 6 was pre-approval issued.
That's what it was.
House hunting, go under contract. 9, processing and underwriting. 10, receive the appraisals. 11, closing disclosures, then coordinate your closing. Number 12, close the sale and take possession. I can't stress it enough. Those are 2 separate events. Closing and taking possession of your home are absolutely 2 closing events. And then after house, protect your family and your mortgage with a life insurance policy. Okay, so let's go to the next slide.
The communication between Robert and I was effortless, smooth, efficient. I mean, all of the things that you want out of an agent, you know what I mean? Any questions that I had, he was right there to answer them. Anything that I didn't understand, he explained thoroughly. I mean, it really was just like the easiest process. The entire thing happened. It feels like it happened in a day, you know what I mean, where all of this happened. But in reality, it was so fast and efficient because of him and his willingness to be present throughout the entire process. I had always known that this would be a temporary situation for myself and for my partner, but little did we know that we were going to experience a great appreciation in our property. And the way that we found out about that was through Robert. Thankfully, knowing him through family and friends and having him over occasionally, he was able to see the value of our property, of our house. And he told us, now would be a great time to sell. And at the time I was kind of like, I wasn't really interested in that because even though it was going to be a temporary property, it just wasn't where my mindset was. And it wasn't until he came to us and was like, listen, your property is worth way more than you bought it for, and there's the potential for you to make a great profit. So I trusted in him and trusted in his process. And before we even went on the market, we had 4 offers for the property, which is kind of insane to think about. And basically we were like, let's jump on it, you know what I mean? Because I wasn't even anticipating for there to be such a huge profit to begin with. And then when we got so many offers, I started to realize, wow, this could be, exactly what he's saying. So I trusted in him and everything that he was saying to us. And basically he was like, relax, this is great for us, but I still want to host an open house. I still want to stage the house, make it look presentable and put it out there so that people can see the real value of what you have. Everything happened within a week and a half tops. So we decided that this was the move that we were gonna make. And I actually went on vacation with my family to Puerto Rico for a week. And in that time that I was not even present in the house, Robert went out of his way to come to the house, restage everything, make it presentable, and even as far as to host the open house that we had where we actually received the offer. So, that just goes to show you how not only professional he is, but how willing he is to go above and beyond for the process because he understands the value and he understands the sense of urgency, So if you communicate to him, hey, I need this done in X amount of time, he gets it done in X amount of time. And that's really, the thing that I'm the most grateful for. If I had a chance to recommend Robert, 10 out of 10, I'm recommending him. Yeah. That's an easy answer. Easiest question you have.